India is actually should be a very, very clear beneficiary of this. Because India has large markets. India's economy and the public markets and the bond markets are large enough to absorb a lot of that capital, which is as allocations are moving away from the US, for example. And second is from a geopolitical perspective, India is kind of the friendly country. India is not a threat to any nation. India also has the same aspects of democracy and rule of law and institutions and the legal setup, which will ensure that investor can invest with faith and ensure that the capital is always protected from rules and regulations. So that being the case, that is India should see reasonably large flows. So if I just go back to the number, if the total amount of investments into the US is say about 40 trillion, and even if 10% of that comes out of the US, that's $4 trillion, right? And if India is even able to get 5% of that 4 trillion that comes out of the US, that's $200 billion. That is sizable in terms of size. Now, whether it happens in next year or 3 years or 5 years, we don't know. Whether it happens itself is we don't know, because most of the money might just go back to home countries. So Europeans will take it back to Europe, Japanese will take it back to Japan, Canadians will take it back to Canada, and maybe keep it there till the time they are able to see what happens in the way the world is changing. But I'm pretty sure some of it is gonna is will get reallocated. Emerging markets might get a reallocation. If the general tendency is that a dollar is going to depreciate, then emerging markets tend to do well at that period. So you will see those allocations. I think India will clearly be a very, very big beneficiary.